Vakar mikrofons nav tāpēc, lai es skaļāk runātu un jūs man labāk dzirdētu, bet mikrofons ir tiem, lai tie, kas pēc tam skatās šo ierakstu, lai viņi varētu dzirdēt arī, ko es saku. Esiet sveicināti Eleving Group birojā. Man ir prieks jūs uzņemt šeit, lai gan šīs nav manas mājas, bet vismaz šodien mēs esam ciemos pie Eleving Group un ļoti foršs notikums. Eleving Group dodas uz biržu ar akcijām. Ar obligācijām viņi to ir darījuši daudzas reizes, bet ar akcijām pirmo reizi. Un tad kopā mēs ar Investoru Klubu esam noorganizējuši šādu te pasākumu, kur ikdienas investoram ir iespēja uzdot savus jautājumus uzņēmumu vadībai, kāpēc IPO, kas tur tajā Āfrikā notiek un kāpēc tāda cena. To es ceru, ka jūs visu pēc tam arī pajautāsiet jautājumu atbilžu sadaļā. Kāds būs šodien darbības plāns ir? Darba plāns ir sekojošs. Mēs iesāksim ar to, ka mums pastāstīs man nelielu prezentāciju par to, par visu, ja? Par uzņēmumu, par IPO. Un pēc tam mēs turpināsim ar jautājumu atbilžu sadaļu. Un pēc tam noslēgsim ar jau tādu neformālākas sarunas, varam turpināt aprunāties savā starpā, aci pret aci aprunāties ar vadību un uzdot arī tos jautājumus, kurus mēs kautrējamies uzdot publiski. Es gan, protams, aicinātu pēc tam jautājumus uzdot arī ierakstu ietvaros, lai pārējā auditorija dzird, jo noteikti, ja tāds jautājums ir jums, tad tāds ir vēl daudziem citiem investoriem. Bet, ja mēs kautrējamies, protams, tie, kas skatās ierakstu, ir jānāk klātienē, lai varētu uzdot savus jautājumus. Šodien no Eleving Group puses par uzņēmumu pastāstīs Modests Sudņus, Eleving Group izpildirektors, un Māris Kreics, Eleving Group finanšu direktors. Pasākuma darba valoda mums ir angļu, bet nav jābaidās pēc tam jautājumus uzdot latviski, jo Māris atbildēs arī uz jautājumiem latviski. Var, protams, arī pēc tam angliski uzdot jautājumus, kā jūs brīvi jūtaties. Bet tagad es pārslēgšos uz angļu valodu, un ja kaut kas arī nebija saprotams, tad pēc tam droši jautājumi gan Mārim, gan Artūrs to kaut kur šeit staigā apkārt. Tur ir Artūrs, ja. Ja pēc tam kādi specifiski jautājumi, ko vajadzēja pajautāt latviski, tad droši arī Artūram. Bet es tagad pārslēgšos uz angļu valodu un sāksim. So, this was a short intro. I hope, Modest, you understood everything that I told. I told this is all great and you will be the best one and you will deliver great speech. I'm joking. But of course you will deliver great speech. So, I will give the floor to you to talk about the Eleving Group, about the IPO. And as I told to everyone, our plan is that we start with your presentation and then we switch to the Q&A. So the floor is yours.
Perfect. Thank you very much. And thanks to Investoru Klubs for arranging this and thanks everyone for coming here. And of course for everyone who's watching the video. So the plan for today, for this evening, for us to walk you through Eleving business plan. And at the same time, we'll present in more details opportunity to invest in our IPO. So let's start by digging deep in our business plan. So essentially, if very shortly, Eleving Group is a financial service provider who's operating globally in 16 markets around the world. Our focus is primarily frontier markets, and also we really try to automate as much as possible and to improve our process. So IT is a very important part of our business. And also our two core main products are vehicle finance, so financing cars, motorcycles. This is the product what we have started, and this is 2/3 of the business. And 1/3 of our business is providing consumer loans. And kind of our story has a lot of Baltic heritage. This is where we have started the business. This is where our headquarters are at. So biggest one is where we are today, like in Riga, but at the same time we have in Vilnius and in Tallinn as well. And combined we employ around 250 employees in our back office in Baltics. And those employees are not part of a loan issuance process. Like actually the only thing what they're doing, basically two core things: developing the IT systems. We have around 100 IT developers, and the other part, 150 employees. Their job is to make sure that operations across all of our markets done at a similar level. Like we're providing risk services, we're providing analytics, we're providing financial services, and this business model really works well for us because it allows to be in frontier markets, but using technology what we have built in Baltics and our talent. And also worth to mention that quite a lot of people are actually abroad at any given time. I would say 1/3 of the team like living or traveling all the time to different markets. And this mixed technology plus this mobile team and this hands-on management really allows us to go into frontier markets, to be successful there, and to make sure that we're not only providing services there, but we're best in class when it comes to customer service, when it comes to speed of delivering services, and our business looks rather similar in Baltics and in, let's say, African markets or Balkan markets. So that has been our business model from the beginning. Here, just maybe a reminder, like a mix of our products. So on the secured financing, our main brand is Mogo, where we're financing used vehicles. So most common car on the street in our markets is more or less 10 years old. So this would be the typical loan in our portfolio as well. Then we have Primero. This is more Baltic oriented. I'm sorry, you have a question, yeah?
Afterwards, like, I have a question about Austria.
Yeah, okay, sure. So yes. So we'll cover that as well. So Primero, this is more like a bank type of leasing, which we're also doing in collaboration with bank. In Latvia, we're doing it with local Latvian bank. In other markets, we're doing it ourselves. But basically, this is where we're already competing with banks. So for bigger tickets, bank type of clients. Rent is this is what we're offering for most of our returning customers, like people who just want to change cars more often. So we're giving that possibility to them as well. Then Mogo Boda loans. This is product which we're offering in Kenya and Uganda. So it's quite an interesting business model. So we're financing motorcycles which are used, and actually new motorcycles which cost like $1,000 to $1,500 or euros, and they're used to only for employment, so to generate income. So typical customer is either taxi driver, because actually motorcycles are used as taxis in those countries, cargo driver, or some providing food delivery services. So we're not only financing a motorcycle, but also we're providing full gear to work as a taxi driver, like helmet and other necessary equipment. Also, we have a very wide taxi association network, so we connect those drivers to that network, and that means they're not only getting a bike, but also they're getting a workplace right away. So that has been very successful for us in African region. Also, 1/3 of portfolio is in unsecured financing, so regular consumer loans, typically 1 to 2 year length, and here I would split it a little bit. So in the European part, primarily Balkans, this is something what's being used to buy some consumer electronic goods, I don't know, mobile phone or something like that. In Africa, it has a bit of a twist because we work a lot with payroll, so-called payroll lending or deduction at source, when we're giving a loan to, let's say, government employee, but actually the payment is made by the employer. So like part of the salary is transferred to us, so which is of course quite a secured product in its nature, because you don't get paid unless person loses a job. And the last twist is more of our, let's say, side investment is already, like there was, I guess, a question like on. So we started this Ox Drive, which is a Tesla electric car sharing, and we've developed it to a fleet of close to 200 Teslas. But at the same time, we also understood that market is quite competitive, and there was 4 big players. So we ended up merging it together with CarGuru. So now in this new entity, we're not a majority shareholder anymore. But we're the biggest investor in that company. And then we believe that after this merge, it should be top 1, top 2 companies in Africa, in Latvia, in Riga, and we believe that that's already a working business model because we were still in this development phase. So now we do expect that it's a standalone profitable business. You had a question, or I already answered?
Kind of, yeah. Like you already said, you still have a part in Oxford. I was thinking, like, does it still belong there because of the merger? Because there is a separate entity you mentioned. So it was obviously called Sly Fox.
Sly Fox, yeah. So we're the biggest investor in Sly Fox, but our share is already below 50%.
Okay. Yeah, that's answered. Thank you.
The question: do you plan to explore your business with Oxford? Because currently you're located only in Latvia.
Yeah. So in short, yes, but where we would be already a bit more passive investor, maybe we would invest, but we would. Here we were also providing funding quite extensively. So we see that this Car Guru or /Oxdrive, that's a self-sufficient entity where we just hopefully it grows nicely and our share of that company appreciates. And I think there's a lot of opportunities for that business. So definitely it will be developed, but not on our balance sheet. Okay, some.
What is your growth rate if you would tell in the last 3 or 4 years? So is it double digit or?
Sure. Very good question. And I have an answer in this slide. So we look at 7 years here. So if we look 7 years back, we were growing on average 26% per year. So pretty much doubling the business every 3 years. This year, let's say in first 6 months, our growth rate, and that doesn't include, that was purely organic growth because we have not launched new markets. It was 13-14%. So we do expect to slightly grow, slightly more in second part of the year. So to have a growth rate of 15 up to 20%. So kind of maybe slightly lower to what we had before, this 26%. But of course, we calculated it from the base, like we're already a bigger company. So once you're small, it's of course easier to achieve this big growth. So our target growth is around 20% for next, let's say, upcoming 3 years. And in terms of financials, so last year our revenue was 189 million euros, net profit 24.5 million euros, and just to compare, like this year we have started already in first 6 months, we have published the results, so we earned slightly more than 15 million, so we're going stronger. And currently in mid-year our net loan portfolio stood at 342 million euros, and 16 markets. Just as a reminder, already we have issued loans to more than 1.3 million customers in those 16 markets, and our sales channel is quite broad. So we have a lot of our own branches, 274 in Latvia, or I don't know, in Baltics, very few branches per country because it's very digital market already. But in market as Albania, for example, we have some 30 to 40 branches because it's still like more cash economy. But also these branches, it's not like a bank branch. It's typically just a table in some consumer electronics store. So it's not that admin heavy. And of course, used car dealerships still are very important partners for us. And another thing worth mentioning, I believe, is our Fitch rating. So we are a rated company, which is not that common in Baltics for quite some time. So there's additional level of transparency. And just recently we've got an upgrade. We had a B-, now we have a B with stable outlook. And of course, expectations would be that if you do an IPO, that you strengthen your capital base, you become even more transparent company, that maybe there could be a potential increase in the future as well. This slide, I think we're especially proud of. It kind of shows, from how we started in 2012 and how we got where we are now. Actually, myself joined in 2013, so already been 11 years. And you can see that like gradually we've been adding new markets. Most of the markets we launched ourselves. We had few acquisitions along the way of consumer finance businesses, but they were very small and they grew in our structure. And currently we see that we're in 16 markets. and we do see that there is a potential to make this a next big step, another double or close to double the business, and that's the reason why we're doing an IPO, because we see that there's still a lot of unused and tapped potential in the existing platform of 16 markets, but also we're thinking about a launch of new products and also get back to the stage when we're opening new markets. So starting 2025, we would see that at least one market per year we would be opening, maybe in some years even 2 markets. And here, just as a reminder, our split of portfolio, our geographical footprint. So 55% of all of our net loan portfolio is in continental Europe, 32% is in Africa region, and 13% is in Caucasus and Uzbekistan. And it's quite a geography lesson could be here, because we do operate in quite a few developing markets. You could even say frontier markets, but at the same time, if you look, and it's probably hard to read, but the share of portfolio per market is very well diversified in our business. So typically, one market has from 5 to 10% of overall net loan portfolio. And we do it kind of intentionally, because we do understand that, of course, in frontier markets, there's more risks, and some things are out of our control. There can be some elections, and maybe some things changes, and so they're a bit more turbulent. That's why we don't want to have a very high dependency on one or few markets, and that's the strategy what we had. That's the strategy what we want to kind of keep going forward as well. And I guess good example could be, we've been also, and I think some of you who's been to our events before, we had back in the days also Ukraine, for example, as a market which we had to kind of pretty much write off in 2 years ago. And even though that happening, we still had a strong year on consolidated level. So we can absorb these small unexpected events once we have this well-diversified risk per market. So that's the strategy what we see going forward as well. A bit on technology. So I guess here, to explain this technology angle, it's easiest with numbers. So if we look at how much applications we have processed, and these are already applications, that means customers give a consent to score him basically, and to get the database, because leads we're getting way more than that. But we got in last 12 months more than 1.4 million of applications. And actually, if you see at the conversion rate, it's not that impressive. It's quite low. So on vehicle finance side, we're financing basically every 10th customer, and on consumer financing around 1/3. First of all, the difference comes because vehicle financing, these are bigger tickets, so bigger liability, and also we need to score the car, evaluate the car. And of course, on consumer finance, because maturity of the loans are shorter, so there's way more returning customers. And especially in our Balkan region, we have very strong database, and actually close to half of the customers, they are returning. So of course, these are the most profitable customers what we have. And how does the underwriting works? I guess this is nothing very groundbreaking here, but we really invested a lot of time in that and a lot of resources. So first of all, we have access to a lot of different databases in different markets, from traditional ones such as credit bureaus, income databases. In same Africa region, where these databases are maybe less reliable, we have access to customers' mobile wallet, which is very popular, because there this bank card age has not reached. So it was cash economy, and now it's actually moved to mobile wallets, because these mobile operators have been promoting that a lot. So when we get access to that, we pretty much know customers' full P&L, like what is he spending his or her money on, like what are the income and so on. So all of these databases, and at the same time, same about cars. We need the VIN code. From VIN code, we can get what exactly are the characteristics of a car, and then we have a tool, our own developed, how we get the data from main car classifieds in each market, and then we calculate with some changes, like what's the average price of that car, but really market price, not some insurance database price and so on. So all of that, of course, we feed into our risk engines, in our scoring model. We develop it ourselves also. It's run in Microsoft Azure, which shows that system. So it allows quite a lot of cool features, like, I don't know, things as machine learning, which essentially sounds very fancy, but it just helps to build models quicker, and it helps to adjust models quicker so that we spend less of our employees' time. So that we've been using, I guess, some last 5 years. And in every single decision, what we make, there's no human interaction. Humans can help to collect the data, but the decision is always done by the system. So, things as, I don't know, credit committees, it doesn't exist in our company. And of course, this automation helps to provide quick answers, often in a few minutes, and that's a big competitive advantage. Maybe not so much these days in Baltics, but in more developing markets, this is really like a standout performance. And a bit more on the sales channels.
So yeah, before I forget, so previous slide, the AI stuff. You mentioned you were using Azure for 5 years, and so that everybody else can hear. Yeah, so you're using Azure for 5 years, which is fine. Like, my question is, like, AI, when did you introduce that technology? Is it like 5 years as well, or like a year ago? Like, how long you've been using that?
I think this is a very used word these days. Everyone does.
That's why I'm asking.
Everyone does AI, but essentially this is nothing new. It just became popular. So for companies which were managing risk diligently, they were using AI. So machine learning is part of AI. It's a module which, let's say, in life, which itself reads the data and gives suggestions how your scoring model can be updated without human interaction. So it analyzes the data, and that was available, I don't know for how many years, but I believe we're using it around 5 years. So we are not using AI in call center yet. We believe that it would not give such a big effect, or in development we're still not using that. So I think it's not adopted well enough.
Okay, so basically you're not using a ChatGPT wrapper, right? Like, you're using something else.
Azure provides an AI functionality, and it's called, like, for the risk modules, it's done through the machine learning functionality. So ChatGPT, no, that's we're not using that module.
Okay.
Only, I believe our PR manager, he's building some chatbots for customer questions in our webpage. So for that, we're using ChatGPT, and for some more recreational purposes, so to say.
Okay, thank you.
Okay, so on sales channels, I guess one of our specialty from day one was that we're not only digital player, we're also offline player. So of course, digital is still main source of leads. More than 60% comes through our portals, through our product web pages. You can actually check, like, in our web pages, we have, in every country, we have our own developed car classified, which definitely looks way better than SSLV, for example. But of course, we're not competing with these main portals, but whereas in some countries there's even 10,000 cars listed there. So we're listing there the cars which our customers return, and at the same time we allow for free our best dealers to list their cars, and we have special promotions through different social media networks and so on. So this allows to get quite good quality leads and quite cheap quality leads for us as well. And of course, our partners are also very happy about that. On the offline side, so already mentioned quite wide branch network, and also these 1,347 dealerships. So we have probably 3 times more, but these are dealerships which have issued at least one of our loan in last 12 months. So some of them maybe have issued 100 loans. How does it work? So used car dealer, they have our IT system where we submit customers' data automatically once the customer signs a contract, and then within few minutes we provide how much for that car, what kind of financing we can provide for that car, what would be the pricing for that particular customer, because you never can trust a used car dealer. So we always provide our own car valuation. But the fact that we have a tool and we added so much more additional functionalities in those tools, this is still like one of our competitive advantages as well, because we really kind of use that tool on a daily basis. Yeah, with that.
If you would compare online sales channels and offline sales channels, what is the proportion in your revenue and profit between online and offline?
Yeah, so offline, again, very dependent on the market, but if you take blended, a bit more than 60% of all the sales and all of the portfolio is generated through online. That means 35% through offline. And so we measure it through lead generation angle. But actually sometimes what also happens that lead comes through online, but maybe certain customers, they still want this physical presence, so they might end up going to our branch as well. So it really helps to kind of offer full spectrum for the customers and to tackle a wider range of population, because of course some people they don't like to dial in to kind of go into digital channels. It's not for Baltics, of course, but in some African regions. So think 60% around fully online, 40% offline, and of course biggest part of offline comes through dealers, because this is the already quite warm customers who have some down payment, who wants to buy a car, and then maybe dealer convinces them to buy a higher, better car, so it's more expensive and they need additional money and so on. So that's the best customer for us. It's a very quick transaction. Okay, handing to you, Mari.
Thank you. So hello again from my side. So welcome everyone who's here and present, and also everyone who's going to be watching this in a recording. So here's a slide of our key employees in the group. You'll actually notice we have a kind of wide variety of different professionals, and altogether we employ close to 3,000 employees across our group, and they are from more than 20 different nationalities. So if you remember, we work in 16 markets. Employees we have from more nationalities than that. If we zoom in on the management board, so there we see two of our longest serving employees in the group, so that's myself and Modestas. We also have two directors in our Luxembourg entity. So maybe for those who don't know this, we have a holding entity in Luxembourg, and this will actually also be the share issuer as well. Then we also have recently introduced our supervisory board, which is independent supervisory board with 2 out of 3 members being independent ones. So if we look at the chairman of the supervisory board, so Mārcis, he's one of the initial employees of the group, also still a minority shareholder. And then we have 2 independent directors. So Derek, he comes from private equity and venture capital background from US. And then we also have Lev. He's, let's say, an esteemed investor himself. He's very, very well known in Baltic and especially in Estonian investors community as such. Moving on the financials. So here, if we start on the left side, upper part, here we can see our revenue growth and development over the years. So here we see full audited last 3 years, as well as the development trajectory for first 6 months of this year. So worth to mention that for the first 6 months of this year, we have already exceeded more than 100 million euros in total revenue. So if you kind of extrapolate that and compare to the last year's result, we're pretty much well on track to beat or exceed 200 million euro mark. And if we compare this result with the same period last year, that is actually this 20% growth. If we look at few of our profitability metrics, so that's EBITDA and net profit. And if we start with EBITDA first, so for the first 6 months of this year, we managed to achieve close to 44 million euros, and that's close to 30% growth if we compare to the same period last year. And on the net profit side, so we managed to achieve during the first 6 months of this year, 15.4 million euros, which is 25% higher than the same period last year. So the dynamic that we would like to highlight, especially here, is that our profitability growth exceeds the top line growth and exceeds the growth of the loan portfolio. So what it means in practice, that our costs, we are able to control the costs in such a way that we are building more revenue on the same cost base. while at the same time also portfolio quality remains very high. And then we have three quite technical ratios here on the lower side of the slide, and these are relevant especially for our bondholders, because also as mentioned by Kaspars in the intro, so we are one of the, let's say, players in the capital markets. We're one of the very first bond issuers in the Baltics, going back to 2014, and currently we have 3 Eurobonds outstanding. 2 of them are secured Eurobonds, and the third one is subordinated one. And these financial covenants are applicable to all of them. So if we start with the interest coverage ratio, so this ratio shows what's the buffer for us, EBITDA, essentially EBITDA over interest expenses. So how comfortably we can serve our interest expense. So here you can see an all-time high ratio of 2.4 times, which is close to 2 times higher ratio than it is required in the bond documents. Then we also have net leverage. Here's the max allowed leverage for our group being 6 times. We are actually working with the all-time lowest leverage ratio, 3.3 times. And lastly, on the capitalization, this is our equity over net loan portfolio. Basically, this ratio shows how much of our own skin in the game we have in the loan portfolio. And that ratio is at consistently for the last 3 years or actually in this slide for 2 years at 26%. And that is also again comfortably higher above the minimal required level. Moving on the few highlights. So I already mentioned the fact that we are one of the very first bond issuers in the Baltics, going back to 2014. Also, we are one of the very first third-party loan issuers in the Mintos platform. We got onboarded, I believe it was 2015, just when the platform was started. And since that moment, over these close to 10 years, we have paid to our investors, just in interest alone, more than 140 million euros. Then again, it's just the interest, not counting into any principal repayments or refinanced amounts. And throughout all these years in the capital markets, we have, as of this moment, we have accumulated a very wide retail investors following. And here we're counting in our bondholders, Mintos investors. So roughly, we're looking at more than 20,000 different investors. And but they are not the only investors who invest in our financial instruments and bond instruments. We also have large investors like hedge funds from Europe, Germany, UK, private banks from Switzerland, asset managers, and so on. So all the kind of retail investors, they're actually investing alongside professional investors as well. And one also important aspect is that during the last 2 years, we have also become a dividend-paying company. So we have paid more than 15 million euros in the dividends to our shareholders. And this is something that we anticipate and plan to be doing also going forward in the future. And our plan is to pay dividends out twice per year with a dividend target payout ratio of 50% and more from the annual profits. Here's a slide on our ESG approach. So let's say if we look at the environment first, as discussed by Modestas, of course, we operate and we finance. Our mission is to finance these mainstream vehicles that drive on the streets. And in European Union, these are actually 10 to 10 years old vehicles. In the markets like Caucasus and Africa, the age group is even older than that. But of course, and all these vehicles are not most environmentally friendly ones, but we take that as a challenge or as an opportunity. And that's why we offer our customers also better terms if they choose to buy hybrid or electric vehicles, so they'll get a better deal from us as a company. And of course, we also have let's say a long-term target that is applicable to our African markets to finance more than 40,000 electric motorcycles by year 2028. On the social aspect, so here also, let's say our primary interest is to have a healthy relationship with our customers, to have a healthy portfolio. And that's why we have set a goal for ourselves also to educate our customers. And to achieve that, we have established several online tools in most of the markets where we operate, where our customers can do a quick financial health check, they can do a proactive credit worthiness check, and generally kind of go through all the details that are applicable to our products. Lastly, on the governance front, so I previously mentioned issued bonds. We also issued our very first Eurobond in the middle of 2018. So this is the moment when, let's say, we count it as a moment when we pretty much became already a public company. So for many companies going public or doing an IPO, it means pretty much a life-changing activity. For us, we have been operating as a public entity already for 6 years. And why we count it as a moment when we kind of became public entity? Because we started reporting on a quarterly basis to all our stakeholders. And we have more than 20 quarterly reports in our webpage where anyone who has interest and time can go back and see how we have executed on our strategy and plans. And all this effort was recently also awarded by Nasdaq Baltics, where we received an award for Best Investor Relations in year 2023, specifically for as it concerns bonds. Here's our growth targets. So this is something that, let's say, we have also published, and we are pretty much looking at 3 key items. So the net loan portfolio growth, revenue, and net profit before Forex. So if we look at the net portfolio growth, by end of year 2026, we plan to exceed 500 million euro total net loan portfolio. If you kind of count diligently year over year, this will actually be a growth rate of approximately 20% per year. And as also mentioned by Modestas previously, for the last 7-8 years, we have been able to grow by 26% on average. So something that's closer in the range of 15 to 20%, we believe, is also achievable in the near-term future. The revenue is expected to grow in correlation with the net loan portfolio with the same dynamics, 15 to 20% per annum. And lastly, on the net profit before Forex, here the growth rate is expected to be higher because we, as you'll also count it here, we expect also to really realize economies of scale, because as we become bigger, we have cost base on which we can build more and more portfolio while not growing it simultaneously. And lastly, also the dividend payout ratio, which I already mentioned before. I think this is your point.
Okay, few more slides from me.
As we are living very close to our neighbors, I wanted to ask about the geopolitical situation. Have you managed to work on a strategic plan in case of anything, let's say so, for the last 2-3 years? And the next, about the dividends, you indicated that the company pays dividends. What is the rate for the dividends for the last 2 years, if you could mention?
I'll start with the second one. The payout ratio for the last 2 years is approximately close to these 50% from annual profits. So this is what we have proven that we can do, and this is what we are committing also in the future. So this 50% from annual profits.
There is we have a kind of publicly available dividend policy which is published. So and on geopolitical questions. So, first of all, if you think about our group, so Baltics is less than 20% from all the revenues. And our systems are built in a way that everything is in cloud. So we don't need, developers also these days like to work from home a lot. So we're not dependent on specific location. Like what we're dependent are on people. But we already have 1/3 of the team is not here typically, they are in Kenya, they are in Uganda, they are maybe in Albania, and so on. So we're already quite mobile company, as it is. And when it comes to what would happen if I know some worst case scenario, we kind of have already some experience from same Ukraine where we had portfolio. So I mentioned that we had to write part of it off, but we are still collecting. We still have a legal entity there. So we're about to approach the time when our collections, the amount which we collect is less than the costs we have to spend for that, but we know how to work, and same even in Belarus, like where we had business and we sold it, we exited it, but for some time the market was in rundown. So we don't have maybe this kind of instant plan what we would do in next 3 days, but our employees can work from anywhere. Our systems operate in anywhere, and we have experience how to deal with those complicated situations. So we believe that kind of puts us in some kind of more prepared state. But we're also tend to be optimists or maybe like realists. I don't know how we say, and hopefully that's it's not going to be needed, this type of plan. Okay, so we're getting to this summarization of our today's presentation. So maybe just a reminder, basically how we're going to get to those figures which Māris just went through. So still, if we talk about next 2.5 years, most growth will come from existing businesses. We're in 16 markets. Those markets are growing. We're still potential to grow in these markets. So 10 to 15% growth we should be able to achieve just focusing on existing markets. Same time, slowly we're going to be adding more products and kind of rolling out those products more extensively. So we already have this, let's say, electric motorcycle financing, but it's quite tiny amounts. But together with the whole economy, we're going to be putting more focus there. And actually, even U.S. government fund already committed $10 million investment to help us finance these motorcycles for the future. This is in Kenyan market. Lastly, we also see that we're ready to test a deeper SME financing product, not in Baltics at first, but we're thinking that Romania could be a perfect market. So think if we're now financing cars which approximately worth 5,000 to 10,000 euros, like we're financing up to 15,000 euros, we want to also give an opportunity, and we finance them also for SMEs, but that's quite small part of our overall business. But we want to offer SMEs bigger tickets, also fully secured, so not for car purchases, but with a pledge of real estate, of agriculture machinery and similar. So those would be bigger tickets, but still, like our sweet spot, we believe, is between 25,000 and 50,000 euro tickets. Longer, smaller pricing, but of course it would be more secured in nature product. So this is what we also plan to roll out in 2025. And lastly, opening new markets. So we've been doing that all along. We know how to do it. We have our, let's say, our framework, how we analyze the markets. And this year we're actually analyzing quite a few markets, which we want to kind of understand better, and starting 2025 post IPO, launch one or maybe some years even 2 markets per year. So they will not contribute much to the overall growth in next 2.5 years, because first years is still like we're like very conservative, like we don't grow that much, but starting second year, once the unit economics are tested, typically this is when the real growth comes. So this is more investment into the future, into 2027, 2028 growth. So all of these 3 angles should help us to achieve the numbers what Māris has mentioned. So adding close to 200 million euros of net loan portfolio in next 3 years. And last slide from my side. So this is kind of summarizing why you should maybe not necessarily invest, but at least consider Eleving as an investment from our point of view. And typically there's 2 types of shares often, like value share. So this is the share which pays dividend, and typically these are quite mature companies, and at the same time share which has quite significant growth potential. So we see that we have quite a bit of elements from both aspects. So firstly, we are already 12 years in the market. Last 8 years have been profitable. Like we already have established dividend policy. We have supervisory board and similar things. So quite a lot of elements of mature company. But at the same time, we've been always building our structure for growth. That's why we are in those 16 markets. That's why we want to open new ones. And we believe that our growth rates are not even optimistic, they're like very realistic and achievable. So therefore we believe that we're more growth company, and you know, we have necessary elements from a diversified funding structure, because to grow, you can't grow only from equity, you need also to borrow in the future, and we have really multiple bonds, multiple contracts with different banks in different markets. We're working with Mintos peer-to-peer marketplace, and so on. And also we have IT systems which are very easy to clone at this stage, from one market to another. We have a big IT team kind of ready to do that. And I believe that for the market, for the Baltic exchange, we bring an interesting angle, because if you would look at all the other companies, they are focused only on Baltic markets. So these are Baltic listed companies focused on Baltic markets. Our story is a little bit different, and we, as already more than 80% of our revenue comes from outside Baltics. So in a way, in Baltics we've built a platform, and we believe that that's a very important angle, because you know, growth in Baltics, it's still like more limited than outside, especially if you talk about frontier developing markets. And of course, maybe last comment here, that we've always been building company as international one. So we attracted international investors. We're domiciled in Luxembourg. We already have a lot of international investors, so we believe that will be a good bridge also how to attract more foreign investors to the Baltic exchange to support our IPO. So with that, handing over back to you, Mari.
Yeah, thank you. So I guess here's one of the most interesting slides of today's presentation. So that's the actual IPO summary, or you can call it IPO offering. So in short, price per share. So that will currently be, let's say, currently we operate with the range. That range might be narrowed down as we move closer to the end of subscription period, but currently we're looking at the price per share at 1.6 to 1.85 euros. And worth to mention that technically you can even invest starting with one share only in the banks. So if we multiply that by 100 million of shares outstanding that we currently have, so we get company's valuation before IPO at the range of 160 to 185 million euros. Our prospectus allows us to raise up to 40 million euros, and those 40 million euros would be split in the following way: that the first 30 million euros, that would be primary capital. So basically we would be issuing new shares up to 18.5 million in total units, and that capital would stay with the company. There we also have a potential upsize option, or in other words, an option for existing shareholders to proportionately sell their share. That is in the euro amount 10 million euros, with up to 6 million existing shares to be potentially sold. Worth to repeat, that's an option. It will be only subject to the book building process and how strong the investor demand is, and how strong generally is the book building process. Also something that we'll pretty much make a decision at a very late stage of the subscription period. On the use of proceeds, so we believe we covered that already before. So these 30 million euros will be a base on which we'll be able to grow the further company, also by borrowing capital, continuing to borrow capital in debt markets. So we'll have a portfolio, or we expect a portfolio growth in existing markets, as well as launching new products and also entering new markets as described before that. Worth to mention that due to the uniqueness of our company, where we have different, very diverse stack of liabilities, we can actually repay some of our liabilities before the maturity. So, and this is something that we'll also explore in doing shortly after the IPO with those 30 million raised. So we don't sit with those 30 million in the balance sheet and don't do anything. So in a short term, we will deploy it to repay basically the kind of most expensive part of our debt. And largely those would be subordinated bonds, and maybe something from the Mintos platform or some other sources. On the target dividend policy, we discussed already that before. So we have 50 plus dividend payout target, and that would be paid out semi-annually. Quite an important aspect is the lockup. So in our instance, for the majority shareholders, which actually form close to 90% of the company, there is a longer than usual lockup period. So these are 24 months. Usually the term is shorter, even in Baltics and also abroad. So usually that would be 12 months or even shorter than that. So we've done this deliberately, not to put any subsequent stress potentially on the share price after the IPO. So we would not kind of experience any sell pressure on the share. And the listing venue, we of course will be listed in Nasdaq Baltics as well as in Frankfurt Stock Exchange. Why Frankfurt? This pretty much goes back to our historical experience with the bonds. All our bonds are currently listed or dual listed both in Riga and Frankfurt as well. And largely also Frankfurt as an exchange is more user friendly for investors coming from Western Europe generally. It is easier still to trade with the kind of share that's listed in the Frankfurt than it is in the Baltics. So Baltics, even in a European context, are still considered to some level as an island. Also, technically, the settlement is not always smooth. And on the subscription period as such, the period has started, and it started this Monday, and it will last until October 8th. Yeah, so, and maybe on the actual sure. You have a question?
Thank you. Very good presentation
Thank you.
for both of you. Thank you.
Mm-hmm.
And I wanted to ask one more time, do I understand correctly about the lockup periods? So 24,500,000 shares, they will be unlocked based on order books, or they will be unlocked after 24 months?
Mm-hmm. Yeah, so actually not only 24.5 million shares, but actually 118 million, because 100 million we already have as of this moment, and then 18 million new shares. But we count this 90% from these existing shares. So 90% of shareholders, I think the math would work 90% from 100 million actually from the existing shares. That will be unlocked kind of spot on after 24 months. It is not conditional on the book building process, how strong the book is, or anything of that sort. It's 24 months, and then it's being unlocked.
And I think just to double check whether we understood the question, I think those 10 million, if the book is very strong, so that's a company's option to sell. Yeah, so that would be sold, of course, immediately, and there would be even then more liquidity in the market.
Yeah, on the technical way how to subscribe, I think as of now we have tested most of the largest banks. It is technically doable in all of them. You can also follow our webpage, and you can also kind of go through the specific screenshots which explain the actual step-by-step process. But yeah, like I said, in all three Baltic states, major banks, we have tested the process. It works in all of them. And yeah, once again, the subscription period ends on October 8th, and I guess our suggestion would be not to leave it until the very last moment, and in case you encounter any technical problems actually with putting the order in, sometimes they also happen. Yes, and here we have the webpage specifically dedicated for the IPO. And there you'll find all the information, frequently asked questions, also all the screenshots that I mentioned before, and generally all the material that's available for the public, including prospectus. Thank you.
Okay, thank you. Some more questions from audience. You can also ask them in Latvian. I have few. I have few questions. I will ask them. Just a silly question. Your favorite country, in terms of Eleving, not in life.
No, I'm
least favorite.
I'm Lithuanian and of spending most of the time in Latvia, so I guess I have to say Lithuania.
And I would say Lesotho because that's the smallest one. I've never been there, and but we only have let's say 1 million there, so it's small, like a small gem that one day maybe we'll have a reason to go there.
Okay, and Modestus something more extraordinary.
Business side, of course. Business side, you like to visit countries which has highest growth potential, and I think they are most exciting. So, in European part, I think that's without a doubt Romania, where we've been growing nicely, and it's European Union. It's huge population, and we're still relatively small there compared to the potential. Even though maybe it's not the most tourist friendly country, and from the maybe more exotic angle, I really enjoyed Namibia, which is actually a small country, which is very European. You get like this French, Spanish vibe there, but we have acquired that market a bit more than 1 year ago, and we already doubled the portfolio there, and we see that traction is really good. It's kind of very easy to grow there, and even in that small market, we're becoming quite a sizable player. So. And of course, from all the, what country can offer, like from the seafood to beautiful nature, that's really worth to visit.
Okay, very good. And then next question about non-payers or NPLs. And of course, we live here and we kind of know how those are dealt with here. And how do you manage those one? What are the biggest differences in different countries, and maybe some examples as well would be useful. In some more exotic markets, of course, I'm more interested.
Yeah, of course. I think in Baltics, it's there's few, and it's very very easy to manage. But fundamentals are actually similar in every single market. It's not that we reinvent debt collection in Africa, but still, I think if we talk exotic markets, let's then cover Africa, and there's quite a few interesting facts there. So in Africa, a big part of our portfolio is secured. So there's a collateral, and every single car or motorcycle which we finance has a GPS installed. Actually, because we're financing new motorcycles, so we already have a factory GPS installed, which is kind of connected to our systems right away. So. And it maybe sounds exotic or expensive, but these days GPS tracker costs some 20 to 30 euros, and especially if you buy it in the amounts what we are buying them at. So and right away this GPS tracker sending signal to our system depends. I don't remember. I think sometimes every 15 minutes because it still uses some mobile internet. So right away we understand. Where the customer lives, where he's going, and so on, in case he stops paying. So that's very useful information. And what we try to do, so of course, we try to make sure that they don't default, so that we score them properly. And maybe biggest difference in general, like in products, if you're buying a car in Latvia, maybe your down payment can be even €0 or like 5%, 10%, 20%. But if you are buying a car in Kenya, let's say, and you want to get a financing, you need to understand that owning a car in Africa, that's a big deal. Like that's a very big purchase because cars are not cheaper than in Europe. I would even say more expensive. So let's say average normal car used car of course, could cost $6,000-7,000. So for these economies, that's a very big amount. That means we're working with upper middle class level, and one very effective tool how to decrease this level of defaults without any complicated scoring models, which we still use, is down payment. What's your skin in the game? And in most of the cases for car, it's very high. It can be 40%, and actually it's typically 40%. That means if you buy a car for whatever 7,000 euros, more than 2,000, you bring your own money. So these are people who already are able to save. They know how to do it. So that improves the performance significantly. But of course, if people don't pay, then we go into this mid-collection level, and we're very active there. SMSs, calls, we even have robot calls, we have quite automated system when we don't dial that number anymore, you have predictive dialers and things like that. So that's quite well automated. And in those cases, we're trying to offer customers some solution. Maybe extend the term when your monthly payment will go down. Okay, maybe you overdue, you have some overdue amount, you have some penalties. We'll maybe forgive you the penalties, just start paying, and so on. So actually the system automatically gives those offers so that it's not a creative process, it's automated process. If it doesn't work out, then debt collection is actually the same everywhere. In Estonia, in Africa, and just in Estonia, we don't have GPSs and down payment is smaller.
So it's more riskier market.
On paper.
I'm joking.
On paper, but and actually, we get back more than 90% of all the cars in Africa and motorcycles. So only 10%, less than 10% we lose. Sometimes it's crashed, you can't find a customer and so on. So then we have to go legal collection way, but very high. And typically once we get, because these down payments are so high, once you sell the car, you cover pretty much full principal. So because it's quite tough to get back the unsecured debt in Africa. Of course, on our unsecured products part, it's not that hard because we're working with kind of government employees often. So this is quite easier because bailiffs also work there. But if you work, with a taxi driver who maybe stopped paying and so on, so you need to get a collateral and kind of cover biggest part of the debt. So, and that's what we do. And we have actually our security team is managed from Estonia. So in every single market, we have our own repossession people, who are going after the bikes or after cars if customers are not paying and not bringing themselves. We also have our own security officers who are making sure that there's no fraud because it still sometimes happen and you can be tricked. Even the best risk model can be tricked. So it's just, I think, maybe more intense work in some markets, but the process essentially it is the same on paper.
Okay, thank you.
May I ask one more, please? You are competing worldwide, of course. And what are your main two biggest competitors and what are their, what are their values compared to yours? Very roughly. It's a complicated question.
And it's tough, tough to answer because 16 markets and we don't have a very strong peer which would be doing similar things internationally. So in European side, on consumer lending, we have more where's a Estonian player, Uta Credit, which is now a bank. So they are going more this banking way. And we have, I would say we have way bigger sales channel than them, but technologically wise, I think we're also quite advanced. But we operate only in Balkan markets. More in this European part, same Romania, we do already have some overlap with banks. So bank consumer loans for certain group of customers, they can take some of clientele from us, but that's overlap is maybe not that big. If we talk about Africa, there we really have more these, I would say, monster type of companies who has billion euros portfolios and so on, and they work on Pan-African level. These names will not tell much for Baltic investors, but it could be Platinum Credit, it could be Lechego. Some of them are also listed companies in Africa. But the beauty of kind of competing with them is that they are non-bank organizations. They are often actually charging even higher prices than us, but they still operate like traditional banks. So they're slow and bureaucratic. So not that data driven, to be honest. So far it has been relatively easy to take market share from them because they are still huge and they've been there for 20 years. So we have a loyal client database and clientele, but with our, being more aggressive, being creative, and then kind of being able to score customers faster and more effectively, we're gradually taking that market share from them.
So the speed, yeah.
Speed, and I would say we're able to tailor an offer better to our customers, because if you'll get, like, if you're a good payer, you'll get way lower price than if you maybe had some difficulties in the past, and we'll provide that automatically, so that customer will have natural incentive to go to us. But at the same time, of course, like speed and technology kind of helps us to beat those, and just the mindset, because those organizations are just built differently. They are built on a lot of labor-intense activities that you get a lot of papers, then maybe you scan the manual and so on. So it's just a different mindset how they and us operate.
Okay, one more for me. Regulatory risks, as we had in Latvia, like wild west at first, right? In non-bank lending, and then afterwards some licensing and more expensive and higher barriers of entry. How does it look in your growth markets?
We are licensed but it's same in Latvia, same in Romania. It's in European Union these days. Regulations are very similar. Like Lithuania looks similar to Estonia. Estonia looks similar to Romania. Maybe some angles differ. So we already proven that and I would say it's quite heavy licensed. That we're able to operate successfully with heavy licensing in place. In Balkans, I would say they may be one step behind, but they are getting there, and I think they get a lot of. Let's say they follow this the EU angle, and I think Moldova already quite heavily regulated. So there again, we're able to adopt. You lower the pricing if needed. You work more on repeated customers, which are getting way better pricing, because you want to keep your customer happy in long term. And on more of these, let's say, which might sound as wild west Africa, but actually there we have also regulations, quite strict ones in some of the markets. I would say if you take Namibian regulation, it is from some angles more strict than in Latvia. So for example, up to certain level of a loan, you can charge the customer maximum 130% of total amount. So if you give a loan of 1,000 euros in, let's say, I don't know, in 2-3 years, you can collect maximum 300 euros on top. So I would say that's way more strict than we have in Latvia. So whereas these regulatory frameworks in place, not all of them regulate, let's say, income checks and similar that stuff. But of course, they also build knowing market reality, like that you need to allow to take into account more variable income sources. And if you look at offerings and competition, we're somewhere in the middle. Of course, cheapest financing comes from banks, but with digital lenders and there's like our non-bank lenders, which are really not focusing on score that much, but focusing on high pricing. So that we're in the middle, and we feel very comfortable that whatever will come should not have some detrimental effect to our business case.
Yes, so now there's quite a lot of talk about the possibility of a recession, and your leverage ratios and debt to equity ratios are quite high. And basically your industry is also quite risky during a recession. So my obvious question here is, what is your risk mitigation strategy in such a case?
Sure.
Yes,
I'll take the rest.
Maybe I'll add that. So actually, on the recession talk, of course, upcoming recession, most awaited recession ever for the last 3 years now, at least, and more. But I think it's worth also what I suggest to look at. We have these materials in our webpage. We have also our non-performing loan ratio shown how it performed over the last 4 years. So if you recall, we had the COVID outbreak in year 2020, then we had war situation in 2022. Also simultaneously, all the interest rates were shooting up, and just central banks trying to kill the inflation. And of course, it impacts companies that work with leverage as such. And if you would look at that graph, we have always maintained an NPL ratio. So that's a non-performing loans portion from the total loans portion below 10%. So all throughout these 4 years, we have operated with below 10%. We have not encountered situations where it kind of spikes up and we're not able to control it. So let's say that's one angle how we have. You can judge by the potential future performance by looking how we performed in the history. But
yeah, and maybe just to add, I think really the COVID was the toughest test for us, especially for this vehicle financing product, because our customers are using vehicles most often to generate income, and if you can't be on the streets, how will you generate income? So it was really very tough times for us, and then we had to be understanding to our customers. That's actually the time when we built quite advanced these restructuring options and so on, because we did not want to just also repossess thousands of cars. And what we saw that, we allowed people to pay less for a certain period of time, but once situation stabilized, we got back and we saved like really huge number of customers, and we have a dip in 2020, but a big recovery in 2021. So I think to some extent we've been tested at least a little bit, and we've prepared for that. And there I think, of course, like still our payments are quite small compared to other like more significant liabilities. And it's a fixed payment. So I think what happened in recent years that our payment became cheaper comparing to bank payments, because there was no Euribor or like no flexible variable. And lastly, we're maybe not paranoid, but we're thinking about that recession, and we strictened our underwriting rules around 2.5 years ago, and we kept them that way. And again, you can actually go back and see, like I showed our conversion rates. So they've been dropping every quarter. But what's good that we've been getting more and more applications. So we're still able to grow, but actually we have been more conservative, and our impairments also, they went down. That means that population which came through the door in last 2 years, it was better. So I think we're also waiting for that recession was going to happen, and I think not much has happened. So we have, I would say, our impairment levels, maybe they're even too good now, and we could probably take even like a bit riskier customers. But now we don't need that. We still see that demand is there. We can grow in this risk categories as well. So you never know what's going to happen if it happens, but we've been tested at least quite, as a business we've already been tested through last 4 years.
And one more about interest rates. A sensitivity. Is there a direct, like, I don't know, 1% interest rate decreases plus 5 million profit?
Yeah, I think it's worth to mention that if you would break down our P&L, interest expense is actually not by far the largest expense item in our profit and loss statement. So let's say we have our impairment expense or the portfolio provisions and admin expense are actually higher in absolute terms, and but also importantly, we borrow with the fixed rates. So also I mentioned bonds before. So we have 150 million euro bond. We issued that at 9.5 fixed rate. Just recently, end of last year, we issued the 50 million euro bond with a 13% fixed interest rate. In Mintos platform, we're also borrowing at fixed interest rates, depending from the loan term, but they're all fixed. So we have some debt with variable cost of financing, but that is by far not the largest part of the let's say debt stack. And of course, like currently we're actually in the kind of decreasing interest rate environment. So to some extent, let's say we hope that we'll be enjoying let's say a more favorable interest rate environment once we also refinance these bonds. So okay, it's worth to mention it. You can actually see that in a coupon dynamic. So we issued 150 million euro bond in year 2021 at 9.5%. actually 2 years later, in year 2023, we issued a new Eurobond at 13%. So you already see, let's say, kind of a dynamic there. But it's worth to mention that, let's say, our revenue is by far multiple times higher than our interest expense. And this is actually the improvements in the portfolio quality in the underwriting was actually our response in anticipation that, let's say, our cost of financing would increase. Yeah.
Okay, thank you. Any more questions from audience? Oh, yes, start here.
In the prospectus, it is mentioned that your biggest shareholder will sort of borrow you, or you will borrow the shares from the shareholder, and then you'll return them back. Can you explain a bit more about that?
I can do it. So it's really a technical exercise because this allows for the investors who makes a placements to get their shares right away, because it's still once you do an IPO with like potentially thousands of new investors and all of that, afterwards you need to register in notary in Luxembourg, so it takes 3 to 5 days, and then you would be in a situation that you committed your money but you don't have shares. So to avoid that situation and to lose that 1 week, there's already shares issued. So you're gonna get let's say the banks will borrow those shares from the shareholder, give it to the investors, and then once the kind of money comes in and all the registrations are being done, then the bank will return the shares to the investors. So that's actually a common practice in Baltics. How these IPOs are done, just to avoid that due to some legal or like bureaucratic nuances, people have to wait and then not getting actual shares in their bank accounts.
Thank you.
Yes, thank you for a very interesting presentation. Some short questions. First, average interest rate charged. Second, how much of these vehicles, I guess mostly, is insured, like with a wild area of risks? And third, I think the average tickets seem to be quite smallish, so the risk is that it takes too much labor, for example, to work on these sums of money. Yes, and how are you dealing with this? Where is your labor costs mostly located? How will you manage them? You have some kind of strategy to open some kind of offices somewhere?
I'll start maybe from the end and not forget. So in terms of average tickets, and then kind of, I assume your question is like that debt collection cost might be, to collect it might cost too much money, but actually it's not that small. Like in let's say European part for vehicle finance side, it's 5,000 to 7,000 euros. On the African side, of course, it's smaller, like a motorcycle, so it's typically around 1,000 euros. Cars, without a down payment, it's some 3,000, 4,000, 5,000 euros. But also we need to not forget that labor costs in those markets are way lower, and we're extremely efficient in that collection. So one person in a market, and that's probably not exactly the same, but can collect up to 50 vehicles per month. So, and if it's motorcycles, one person can collect more than 100 motorcycles per month. So we don't need that much of labor costs, and they're quite cheap. And afterwards, we sell that also ourselves. So we have established places, car lots where we're selling those vehicles. So we're very we're always thinking through unit economic lens, and we build it very, very effectively. And then kind of technology, the fact that whereas GPS is, it helps us. And then getting to the insurance, so every single car, of course, must have a this mandatory insurance, but that's not our liability, that's our customer's liability. No, anyways, you can't drive, whether it's Africa or it's Europe. But all of a motorcycle fleet in Africa has casco insurance. In Baltics, we don't ask it. In Europe, in general, we don't ask it because also there's no good offers actually, because casco would cost so much casco for used vehicle actually costs very similar as for new vehicle, in similar categories. So it's not beneficial to ask for a customer to get a casco insurance. But on African, again, most of the vehicles have casco insurance, also cars, because there's not that many new car sales in general. So it's the insurance market is adopted for casco, for insuring casco used vehicles. So pricing is way more affordable.
On the interest rate charged to our customers. So here it's actually a wide area of different interest rates. So as we call it, it's a risk-based pricing. So let's say, for example, in the Africa, we actually need to price in things like forex volatility, higher risk in terms of collateral value and things like that. So let me give you maybe a range. So we can go as low as 20 to 30% per annum in markets like Latvia, perhaps also Estonia, but then the higher rates would be close to 80% per year, and these would be specifically these African markets where we have a lot of risk that we need to make sure that it's priced into our product. If you take kind of analytically, if you just take all the revenue for the full year and compare it to the average loan portfolio, you'll get a figure in a range of 60%. So that's kind of the blended on the whole loan portfolio that we have. So that's 60% per year.
Thank you. You said you paid dividends for the last 2 years. What was the payout per share?
Payout per share. So we paid, let's say, very close to what we are committing. So 50% from the annual, let's say, profits paid. Payout per share, I think we would need to calculate
we have
that.
100 million shares.
We paid
15 million, so
15 cents?
15 cents, yeah, per share.
Or 1.5 cent. Yeah, we'll need to check the math on iPhones after the presentation, but...
Okay, thank you. I think we have plenty more questions, but for that, I suppose we continue offline. So those who are watching this recording, you know that you have to be here next time. Paldies visiem, kas piedalījās un piedalieties ar saviem jautājumiem. Eleving Grupai es novēlu veiksmu un izdošanos ar IPO. Es pārliecināts, ka tā arī būs, bet vēlējumi nekad nevar kaitēt. Un, jā, protams, beigās atruna jāpasaka, ka šis viss bija informatīvs materiāls, katram pašam jāvērtē savi riski, jūs jau zināt visas atrunas, vai ne? Un katrs pats pieņemam lēmumus, rūpīgi vērtējot visus riskus, iespējas, prospektu lasām, visus citus materiālus. Paldies, ka bijāt šodien šeit, paldies Mārim, paldies Modestas, paldies Artūram un paldies Eleving Grupai.
Paldies.
Vislabāk tā!
Mhm.